Welcome back. As we've been talking about where we are in the crypto cycle, we are now hearing this. NASDAQ has tightening this scrutiny of companies raising cash to buy crypto. This is the Cryptoviser podcast. In today's video, we're going to be exploring what is going on in the crypto markets because we are seeing things like Polymarket set for US launch after getting the green light from the SEC. But we're also seeing massive selling and downward pressure on Bitcoin treasury companies like MicroStrategy and others. So what is really going on in crypto? Where are we in the cycle and where are we going? That's what we're going to be discussing in today's video. So make sure you guys are subscribed to the channel. That way you never miss a new video. We upload every single day. Sometimes we do deep dives into individual cryptos, and sometimes we talk about the macro environment in the markets like we're doing today. And again, this channel is about trying to understand what the market is going to do. That way we can position ourselves appropriately and make good financial decisions to hopefully make the most amount of money in our portfolios and protect our financial future. Because as you guys know, we've been talking about the psychological market charts. And I believe that we're here at the top, whether we're in euphoria, past euphoria, before euphoria. I believe we are at the top of the market. So it doesn't matter where we are exactly. The bottom line is we're close to the top, if not already past the top. And a lot of people in the market, a lot of the sentiment on social media is, oh, one more pump. We're going to have one more pump, and then everybody can exit very orderly. Or we're going to have an extended cycle, and everybody will know exactly when to sell, but it'll be next year, and you don't have to worry about the price until 2026. Well, as you guys know, this does not kind of jive with what my thesis and the market has been and is. And let's just be clear, like my thesis, generally speaking, has not changed. I may have gotten more strong on certain opinions and less strong on others. But the bottom line is I'm willing to be wrong because the only thing that matters is the markets. The markets don't care if you're right or I'm right. The only thing and the only actual indicator of who is, a good investor is what your portfolio shows. And by the way, if you lose in certain positions, that is a great opportunity to go and look at the position that you lost in and say, why did I go this long without selling? Why didn't I have stop losses? Why didn't I see that we were at the top? Because we are seeing a lot of companies. Take Nakamoto. This is one of the Bitcoin treasury companies. They are selling massive amounts of their shares on the open market to then go, essentially raise money and buy Bitcoin. But look at what is happening to their share price. I mean, just in the last 1 month, we're down over 50%, just 77% from the middle of August when I called the top on this channel and people said, Cryptoviser, we're not at the top. We have a lot more to go. And the bottom line is, I'm not saying that we're at the Pico top forever or that nothing's going to go and pump, right? Because to call the exact top for every single asset and every single stock in crypto, it would be almost impossible. You just have to know generally where the top is because, guys, the stock market, all-time record highs. Crypto, all-time record highs. Many stocks involved in crypto, all-time record highs. And so what would be the trend after all-time record highs? Correction. Corrective phase, profit taking, more liquidity extraction, and all of these things is what we are seeing in the cycle in the market right now in September of 2025. And we've been seeing it the whole second half of 2025 so far. And in my view, we're going to continue to see it because the way up can take multiple years, but the way down, typically from the top of the market to the bottom, is 1 year. So let's get into all of today's topics and video content. And make sure you guys are subscribed. Don't forget to give the video a free thumbs up. We upload every single day of the year to bring you the latest happenings since 2018. So we're going to start right here with what's going on in the betting markets because this is another indicator of where we are in the cycle. Let's get into it. Now, we're hearing that Polymarket is going to be launching in the US, potentially some of the other betting markets like Kalshi as well, after they get the green light from the CFTC. The Polymarket CEO said in a post on X, Polymarket has been given the green light to go live in the US by the CFTC. Credit to the commission and staff for their impressive work. This process has been accomplished in record timing. Now, I don't think this is that big of a deal in terms of like regulatory approvals. I mean, pretty much anything crypto is going to be approved over the next few years, with the administration that we do have in all of these regulatory bodies. That's my viewpoint. But this is an indicator of kind of where we are in the cycle because, again, they're pumping out prediction markets. And so this prediction market, people are going to probably start using. And it's been kind of like slowly entering people's mainstream coverage, right? They've been covering it on mainstream financial channels, on social media over the last few years, even though US access has been extremely limited or non existent. And so now getting the access, I do think that we will see kind of some of the liquidity exiting some of the stocks and cryptos and moving into the betting, especially, betting is another derivative of markets, right? So is Bitcoin going to end at, over 500,000 by the end of the year? Is Bitcoin going to hit another all-time record high by the end of the year? These are all derivative bets on the actual market. And we know when there's high speculation and high speculative moves in the market, this is when the markets and the derivatives can really make people money. So this is going to be very interesting to see how this all plays out. And remember, we're still anticipating ETF launches. And so if the ETFs get approved, this gets approved, it looks very bullish, but this also is usually an indicator of top of the cycle. Meanwhile, by the time you're watching this video, you're already going to know whether MicroStrategy was or was not included in the S&P 500, which has been pretty much a year-long anticipation from the MicroStrategy bulls, stating that the first Friday in September is when the S&P 500 does a rebalance and announces the rebalance and potentially is going to add companies like MicroStrategy to the S&P. Now, I've told you guys, I don't think this is going to occur. I don't think this is going to get approved. And what have we been seeing for the last few weeks? Massive, massive selling of their own shares at the market, and there's still no NAV compression because the price of Bitcoin is kind of staying the same, but the price of MicroStrategy is going down. Now, we're going to come back to the MicroStrategy thing in a minute, but by the time you're watching this, the price is much lower than you're probably seeing on the screen right now for MicroStrategy because of this. This came out the day before the NASDAQ, the S&P supposed announcement for MicroStrategy. But that was, once we saw this the day before, I was like, oh yeah, this is a lock that they are not included in the S&P 500. Because the MicroStrategy bulls think like what Michael Saylor and MicroStrategy are doing is like the most revolutionary, amazing thing that all the markets need access to. But traditional investors don't trust this, selling shares in the open market. The stock price goes down, they buy more Bitcoin, and there's no other revenue stream. There's no other cash flow. There's no other business, really. Besides, Strategy does have a software business. When I saw this told me, oh yeah, things have been way overheated as Wall Street firms rush to funnel capital proceeds into digital asset treasury programs. The NASDAQ is ramping up supervision of these publicly listed crypto holders. And so, NASDAQ has begun requiring shareholder votes for some deals and pushing more disclosures. Now, again, it's not like MicroStrategy is not disclosing or that the shareholders haven't voted. But they want to kind of slow down some of the drain that is going on in these overhyped markets. Another overhyped market is the XRP ecosystem. And we've been covering what the Swift chief investment officer has been saying on social media recently. This user said that the Swift CIO essentially is saying that many XRP influencers misled people. There won't be a single chain like XRP replacing Swift or the banking system. The future of finance will be a network of interoperable blockchains connected through the communication and settlement layer, which will be Chainlink. Also, Ethereum plays a key role in that vision. Now, I would agree with this. I don't think that there's going to be any single player winner, any single blockchain, any single bank that's going to win. That's why we have competition. But the XRP army believe that Ripple and XRP are going to be the financial system. F everybody else. The same way that Bitcoin maxis say F everybody else. The Swift CIO posted this on, it looks like LinkedIn. He said, I've received a lot of feedback on X and LinkedIn lately. Let's just say, many in the DeFi community are passionate, but often miss the very fundamental thing about how finance actually works, and that's what's required to use public blockchains like Ethereum at scale. Now, the chief investment officer over at Swift said some of my DMs response even start with lines like, that is one opinion. It would be helpful if you could share views without the insults and sarcasm. They don't add much to the conversation. You come across uninformed and childish. He said, yeah, I really send that sometimes. Anyway, here's the serious point, he says. Neutrality in finance isn't about how many nodes you run or whether the code base is open source. It's about governance, legal enforceability, and ensuring no single participant can tilt outcomes in their favor. And I would agree with this. And one of the things that we've seen in some of these ecosystems with quote unquote governance is they try to make it seem like it's totally, completely decentralized, but it's all centralized parties with hundreds of millions of wallets that are making it look like they are, the governance is actually decentralized. But you like these big Wall Street firms and banks and institutions, they're not believing the BS. And that's why the government data for the United States through the Department of Commerce went on specific chains and didn't go on other specific chains, because they're not going to believe the nonsense. Just because you say you have great governance, but there's almost nobody utilizing the chain. How can you really have high governance when nobody's using the chain? So who's using people are just using the chain for governance? It's ridiculous. But a lot of these ecosystems seem to believe that people are just stupid and going to blindly buy their coin because it has great governance, but nobody's using the chain. There's no partnerships. There's no connections. There's no interoperability. These are big issues. And by the way, I'm not just talking about XRP. There's a lot of other chains in the top 50, top 100, top 200 that are like this. But XRP, it's not interoperable. They haven't really built out DeFi rails. They don't have a DeFi ecosystem. So how can they be the future of finance? But anyway, continuing on, he said Swift doesn't issue assets, doesn't compete with members, and is structured as a cooperative of 11,000 institutions. That's why it's trusted as a neutral orchestrator. He said public chains like Ethereum absolutely have a role by providing programmability, transparency, and settlement innovation. And these are essential. But neutrality in global markets only works when you combine open infrastructure with trusted governance, regulatory alignment, and dispute resolution. Code alone doesn't settle billions of dollars of disputes. And by the way, talking about Cardano with no interoperability and no stablecoin, the argument from the engineers in Cardano has been, well, we don't need USDC because USDC is centralized and they can freeze the coins. It's like, yeah, that's the point of a stable coin. So the coin stays stable, even if coins are stolen, coins are, interacting with sanctioned entities. Like, that is necessary for confidence and usage and trust in the system. This idea that you're going to invest in you're going to hold a stable coin that has no protections is completely ridiculous. And but again, there's engineers who think, oh no, like this is the future of finance. We do not need USDC. That's not the future of finance, even though it clearly is because everybody's using it. But there's going to be siloed chains. But anyway, continuing on. And by the way, this is not coming from me. This is coming from the chief investment officer at Swift. He says, that's why the future isn't Swift or Ethereum. It's both. And it's multi-chain. Institutions need the trust scaffolding Swift provides and the innovation open public infrastructure, including blockchains, enable. Together, they can deliver the scale, neutrality, and resilience that global finance actually requires. And I agree. He's not saying that blockchain is not going to be part of global finance. What he's saying is, for it to be part of global finance, Number one, it's not going to be the only thing. So XRP Army, forget about it. Cardano saving the day with a non-freezable stablecoin. This is not the future of finance. It's just not. It isn't, and it probably never will be. And you can see that the market is pricing that, right? Besides the XRP Army, who's buying XRP? Besides the Cardano engineers, who's buying Cardano? It's definitely not the institutions. But meanwhile, we now have Dominic, the founder and chief scientist over at Dfinity Foundation, which is the main contributor and developer of the Internet Computer. I thought this was a satire post, but apparently it's not. He said, would be fantastic if there was a listed Internet Computer Strategies treasury company holding ICP in stock in operations, driving self-writing internet, one ticker for the billions of apps that might be created by AI. He said, we, of course, have been looking into this. Well, I hope they're just looking into it and not going full force. Now, here's the deal. I'm not against these strategy companies for Bitcoin, for Ethereum, for SWI, for Internet Computer, for any of these cryptos. I don't care. But we are at the end stages of the cycle, okay? You guys have to understand where we are in the cycle, okay? There are companies currently buying Bitcoin at all-time record highs, okay? We're about to go over some of them and how some of them, they're starting to crack. And by the way, the market hasn't even dropped yet. So they're starting to crack before we've actually even gone into the bear market or approached the bear market, because we're still literally at all-time record highs. When we test $70,000, $60,000, $50,000, that will be a different story. But these companies are buying all-time record highs. And so what's going to happen in a bear market, right? Take ProCap. This is Anthony Pompliano's company. Well, this is not correct, but yeah, they basically have 1,200 Bitcoin. This was their most recent purchase in June that they bought for $105,000. And so their overall dollar cost average right here, it's saying $21. This is obviously incorrect. But it's over $100,000. That's their buy price. And so what are they going to do if we hit $50,000? And by the way, the company's stock is also not doing that well. Now, we're going to get into some of these other companies in just a minute. But before we go there, back to the Internet Computer thing. I do think that this would be smart in a bear market, right? In a bear market to start raising money and to start buying ICP, or raise money now and then buy in the bear market. Now, there is something to be said about Internet Computer's price not really being in the top of the bull market, and maybe we're not. Because when I say top of the market, I'm specifically talking about Bitcoin. Now, obviously, everything else kind of follows Bitcoin, but that doesn't mean that we're not going to have certain altcoins perform when Bitcoin's at the bottom. Because, number one, ICP is on a different narrative than Bitcoin and Ethereum, because it's not in this whole Wall Street situation, as are many other altcoins not in that situation. And so we could see movement in the Internet Computer price. I mean, he even said less than 1% of Web3 knows that Internet Computer remains the only blockchain running apps on-chain versus on cloud, with just a token on-chain, running real decentralized AI and providing unique specialized tech stack where AI can build apps on its own, solo. And so if it's part of the AI narrative, maybe we're going to have a run-up. But then at the same time, there's a lot of talk about the AI bubble. And so if AI, outside of crypto, like in traditional business and finance, if AI is in a bubble and it's going to pop, well, I would imagine Internet Computer is probably not going to perform the same way that AI is not going to perform. And so that's something to keep in mind. But we are hearing even from Brian Armstrong, the CEO of Coinbase. I thought this was a really interesting stat. He said 40% of the daily code written at Coinbase is AI generated. He said, I want to get it to over 50% by October. Obviously, it needs to be reviewed and understood, and not all areas of the business can use AI generated code. But he said we should still be using it responsibly as much as we possibly can. And that's very interesting to see that Coinbase is now utilizing this, because if Coinbase is using it, a lot, I'm talking about AI generated code, and using AI, large language models, to help you code programs that you're trying to create. And this is very similar, I would imagine, to other companies in the tech space, in the finance space, are probably doing this. And so again, if you're working a job and you're not using AI tools, your job is probably just planning to replace you. And so you got to find a job where you can use AI tools. Otherwise, you're going to be left behind. But anyway, we'll get back to ICP on another video and kind of update you guys on what they are doing. But I think it's important that we also understand what else is going on, because this is very top of the cycle. And remember what I told you about SWI. SWI is the Solana of this cycle. Maybe it's going to work out in the long term, maybe it's not. But it seems very, very bubbly, very, very bubbly. This user said the block has a story about the SWI treasury buying locked tokens at a discount, and it mentions the tokens are coming directly from the SWI foundations. So the tokens are obviously not locked because they could be sold. So is the whole thing a farce? Also, the SWI Foundation is so desperate to dump its own tokens that it's selling them at a discount. Could somebody please steel man this before I pop off? Now, I would completely agree with every sentiment in this post, okay? Yes, SWI is essentially selling their locked tokens. Now you have to understand, they're locked, meaning they can't technically sell them on chain, but they can just sell the ownership of that wallet to another entity. And so effectively, they're saying this. I think I actually just typed in locked. Yeah. It says, since the initiation, and by the way, this company is called SWI or SWI Group, and it is listed on the NASDAQ. They said, since the initiation of our SWI treasury strategy in late July 2025, we've expeditiously accumulated over 100 million SWI, underscoring our conviction in the transformative potential of the SWI blockchain and its critical role in a future of decentralized finance, according to the chief investment officer of that company. He said, we plan to continue to seek accretive capital raises to make additional purchases of discounted SWI and, in turn, increase our SWI per share to generate value for our shareholders. And so, yeah, SWI Group is buying their SWI directly from the SWI Foundation. Bearish. Very, 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 very bearish. This is exit liquidity. This is the same path that they were taking with Solana. This is a value extraction. Maybe even it could be more actually related to Terra Luna. Because SWI as a technology, from my understanding, yes, it is does have the fundamentals that a lot of other blockchains do have, but it doesn't have the usage. It doesn't have the partnerships. It doesn't have the time tested. Remember what I told you guys last cycle. If a crypto has not been through 3 market cycles, 2 bear markets and a bull, or 2 bull markets and a bear, it's uninvestable. But people are believing the nonsense from the billionaires and continue to buy SWI. Meanwhile, the foundation, and SWI is a brand new crypto, guys. Like, it's a brand new crypto. And so this idea that the SWI Foundation would be selling their crypto at a discount to a publicly traded company, number one, just to get there, to say, oh, well, we have a publicly traded company. Number two, it's at literally all-time record highs, okay, in the price. This coin has been around since 2023, mid-2023. So basically, into the beginning of the bull market. Because from 2023 to 2024, most cryptos pumped. And so notice that they launched it earlier than the bull market. And even while most cryptos from essentially September 2023 into 2024 did well, I mean, so did SWI. It went from 40 cents to $2. So basically a 5x, and then it's done even more this year. And now you have a company buying locked SWI to quote unquote pump the price, but all it's doing is enriching the insiders. That's all it is doing. And so this is absolutely correct. This is a complete and utter farce. This is the indicator. Okay, forget about Bitcoin treasury companies, forget about Ethereum treasury companies. SWI is selling their locked coins from the foundation to get a company investing in this crypto. Meanwhile, again, no partnerships, no major deployments, no actual usage, no integrations, none of that. Seems very toppish to me. Very, very toppish, and also very, very, very bearish for the coin. Because again, they're not buying these coins on the open market. They're buying locked coins. And they're locked for a reason so that they don't sell them. And what is the foundation for the entire ecosystem doing? They're essentially dumping them before they should. That makes it the most bearish thing I've seen this cycle. Like literally the most bearish thing I've seen this cycle. Another top indicator, of course, but another bearish thing. Like no integrations, no partnerships, no major announcements of SWI, but we now have the foundation selling the coin. Bearish. Zero. It may not go to zero like Solana, but this is a liquidity extraction event. That's what it looks like to me. Meanwhile, Peter Brandt even called out what's going on with MicroStrategy. Because as I've told you guys, the MicroStrategy trade is over. Peter Brandt posted on X, is this a top or only a break in the action? And he showed basically the long-term chart back from 2021 all the way through today. Now, personally, I think that we're way beyond the top of the market for MicroStrategy. Even Duo 9 on X that I see a trend line breakdown, the chart is looking pretty bleak. And it is. It's not just the chart. It's also the fact that MicroStrategy has no other choice but to continue to sell their own shares on the open market and continue to push the price down. Every day that you look at the chart and the price is going down precipitously and there's no major action in the price of Bitcoin, they're selling. And yes, they're going to buy Bitcoin, but eventually this thing is going to, in my view, I don't want to say collapse because people have a bad connotation. I don't necessarily think MicroStrategy anything is like they're not going to go down. Okay, the price is going to go down, but I think the company's going to be fine. But this is very bearish, guys. It's very, very bearish, especially that everybody was anticipating an inclusion in the S&P 500. And by the way, another indicator. This is on MicroStrategy's website. They are now selling strategy branded dunks from Nike. I think I saw a comment on social media saying, "Oh, you're highly underestimating their merch sales." And I'm like, this is a $110 billion market cap company that is one of the largest holders of Bitcoin in the world. And you think that them selling their company branded Nike dunks is going to have any material impact on the business? It's not. It's not. This is just another top of the, because this doesn't happen in the bear market. You don't have a company launching their own branded Nike dunks in a bear market. It doesn't happen. And so people were like, oh, the bull market hasn't started. It's like, I mean, based on their merch store, the bull market is almost over. But there's more. There's way, 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 way more, guys. David Bailey, who's now the CEO and founder of Nakamoto, the company that went from Kindly MD into Nakamoto, a Bitcoin treasury company. He said, every Nakamoto-backed treasury company will be a distributed channel to resell a suite of Bitcoin native products and services that both earn income and strengthen the local community. We're building an army of global movement to make Bitcoin the reserve asset of humanity. Sounds very similar to Michael Saylor. But then he followed up with that post and he said, I absolutely hate seeing the stock price go down, of course. Many of my closest friends and family are shareholders, but I can't control the market. What I can do is, in the best interest of shareholders, and execute our strategy dutifully. Together, we'll build a massive Bitcoin balance sheet and spread Bitcoin to every corner of the world. This will take time, but we will get it done. Now, The reason he's saying that the price of that he's worried about the price is because the price of Kindly is dropping big time, right? Before they made the announcement of the merger into a Bitcoin treasury company, the price was in the dollar to $2 range. We're almost back there and potentially going lower. And a lot of guys, you have to understand, like you watch my videos, you're probably on a higher like education level on the markets, right? I read a lot of like social media content and watch videos, and people really don't understand why the price. They think the price is just going down. It's like no. The price is going down because they're selling shares on the open market. They're diluting your shares because their idea is that they want to raise billions of dollars, then go and buy Bitcoin, which I think is smart. And I think it's also kind of smart that they're selling at the top of the market, right? Because this is when they have the liquidity. In a bear market, there is no liquidity to raise money. But at the same time, the shareholders don't understand why the price is going down. They don't understand they're getting diluted. They think this is just a dip. Buy the dip, buy the dip. It's like, no. They're selling shares in the market. Billions and billions of dollars of shares. They're selling on the open market. And so to what he says here that he can't control the market, no, he can't control the market, but if they're selling shares on the open market, they are in control of where the market is and where the market's going. From my understanding, they're trying to raise $5 billion, and they're going to be doing that through share issuance, effectively. And that's why the price is going down, because there's nobody on the buy side. They only have people on the sell side, so the price goes straight down. MicroStrategy, you have still a lot of bulls that are very bullish. So even though MicroStrategy is selling shares on the open market and the price is going down, there's enough liquidity in the market of buyers to offset some of that selling. In Kindly, in Nakamoto, there's not, because it's such a new company. Nobody's buying it really, and you could see that by the volume of the average volume of Kindly, and then go look at MicroStrategy. I mean, it's worlds apart. And so this user Predator said, the wild part about this Nakamoto carnage is that the pipe, or these are private investors, basically you invest in the company and then you get shares, but they're restricted, similar to the Sui Foundation. They're restricted, you can't sell them for a certain amount of time. He says the wild part is that the Nakamoto pipe investors haven't even had their unlock yet. This appears to be David Bailey, the CEO, trying to front run the incoming pipe unlock dump by rushing to dilute as much premium away at the market at the market issuance. What a show. From my understanding, these pipe investors invested at about $1.20 or something like that, about $1.20. And so the idea here is that once they get their shares and they're unlocked, they can sell them in the open market. And so if they purchased at $1.20 and we're at, let's say where we were last week or 2 weeks ago, $15, they're going to sell, right? If you paid $1.20 and then you waited a few months and now you have $15 per share, you're going to sell. And so Predator's theory is that this company is trying to front run this by selling as many shares on the open market as possible to raise as much money as possible before the unlock, so that there's less incentive to sell in the unlock, because obviously they want to extract as much value from the market as possible. They don't want the investors to pull that money out. I mean, eventually, effectively, they do want the investors to do well as well. But for their strategy to be able to play out, they need to raise the money before. Otherwise, the market's going to crash and they're going to have nothing to show for it, right? And so it seems like they're selling so that they can front run all those pipe investors. And by the way, this is happening with a few different stocks and a few different cryptos. Circle is another example we've been talking about, where Circle IPO investors got in at $30 or around $30. And they don't get their shares unlocked until around December, 6 months after the IPO. And so as we approach December, I would imagine Circle is going to drop as well. And we're already seeing it. This is when Circle launched, and we're already down 55%. And so the market is pricing these things in. But most holders of these stocks and most crypto investors who don't watch my videos, they have no idea about any of this. They don't get it. They don't understand the unlock situation. They don't understand that the IPO investors were in way, way, way before them. So they're buying at 100, let's say MicroStrategy. They're buying here at 325 saying, oh, this is just a dip. This is just a dip. But there's investors who've been in since $10, $20, $15. Again, with the split kind of taken into account there. And by the way, there's issues in other companies as well. Sequans, which by the way, I was just seeing really bullish posts a few weeks ago about Sequans because their MNAV was basically 1-to-1. Well, Predator also said, there you have it, the very first Bitcoin treasury company forced to perform a reverse stock split due to poor price performance. They had to do this or else they would receive another delisting notice from the New York Stock Exchange. Will they also become the first company to dump their coins? And effectively, Sequans said, effective September 17th, Sequans will adjust its diluted shares to ordinary shares ratio from 1-to-10 to 1-to-100. So effectively, they are reverse splitting to a factor of 10. And again, they're doing this to push the price up, right? Because if we look at their stock, I think I already have it pulled up, actually. Yeah, I do. It's 77 cents. And you can see right here, I don't know when they became a Bitcoin treasury company, but either way, I would imagine it's probably around this time frame, which was in July. And you can see the price was already kind of on a downtrend on the 5-year chart. I mean, look at this. From 2021 until they made the announcement this year they were going to be a Bitcoin treasury company, 88% decline. So then they became a Bitcoin treasury company, a little bit of a jump in the price, but straight back down, right? We went from $1.50 up to $5.50, straight down and trending lower. So this idea that just becoming a Bitcoin treasury company is going to do wonders, it's just not true. And by the way, we're still at the top of the market. We are still at the top of the market. Sequans average dollar cost average for their Bitcoin is $116,000. I want you to think about that. $116,000. And yeah, they started buying in July of 2025. So they bought at the all-time record highs. I don't get it. I don't get it. I don't think a lot of people are invested in this stock, to be honest. I would imagine many of you are probably not. Many of you probably didn't even know this was a company. But yeah, if you go to bitcointreasuries.net, you can actually see all the Bitcoin treasury companies. And some of the data is not correct, but most of it is. And you can click into them and actually see like what their dollar cost average is. 116,000 is their dollar cost average. Nakamoto, their dollar cost average is $118,000. These companies are already underwater, and we're still at all-time record highs. What happens when we go down to 70,000? Again, there's a lot of people who don't think that we're going to go down to 70,000, but I know that we are, because these companies are already dropping. They're raising all this money. They're going to be buying on the way down, thinking that it's bullish, but the narrative, I think, is shifting away from Bitcoin and into Ethereum, away from these Bitcoin companies that aren't doing anything with the Bitcoin. They're just holding it. They're not selling. They're not taking profits. And by the way, they're all buying at all-time record highs. This is the effective definition of a bubble. And so I think that we have much further down to go. And these companies are definitely going to be ones to watch, because there will be a company or two, and maybe we're already starting to see the beginning signals of which companies may be the companies that have to sell. To Predator's point, this may be the first company that has to dump their coins, because they're going to dump before they go bankrupt. They're going to try to save it before they go bankrupt. But at what price and what cost? Because they're already underwater. And a lot of these Bitcoin treasury companies are underwater. Anthony Pompliano, dollar cost average over $100,000. Nakamoto, over $100,000. Sequence, over $100,000. And so how do you offset that very high dollar cost average in a bear market? You either have to sell, or you're going to have to take a lashing from the investors and the shareholders. But these are the signals, in my view, that things are starting to show us that they're breaking, and everybody wants to become a Bitcoin treasury company, get on the stock market. But these are very bearish events right now. And I would like to see a company selling their shares in the open market, saving the money in a U.S. government treasury until the bear market, and then start buying. But they're all buying at the top. And so there's the possibility that these companies start to roll over in the bear market, and strategy scoops them up and acquires them. And that may be the saving grace for strategy. They're big enough that they can do it. They have enough money and investment potential that they can gather the money, I would imagine, in a bear market to actually do that. And so it'll be very interesting to see how this all plays out. But I really want to know what you think about where we are in the cycle, where we're going, what's going on with the MicroStrategy thesis, and is it over? Is it over? And I'm specifically talking about Bitcoin, because pretty much everything will follow Bitcoin in due time. It may take a little bit longer. Altcoins typically lag Bitcoin, but it may not be that way. The whole cycle may be over, and seeing these sweet company and foundation selling their locked coins, I don't know how anybody could trust this protocol when the foundation itself is selling their locked coins that they shouldn't be selling until they're unlocked. But this is euphoria. People don't see that, and they say, but Cryptoviser, this is the most bullish thing in the world. And it's like, okay, you stay bullish. I have not seen a reason to be bullish at this point in the cycle. I hope that I find one in the next couple of months, because I do think that we are going to go higher. We will have a bottom at some point, but I think we have some time before that bottom. And I'm just going to re-show you a chart that I showed last month in August, and people didn't really, I don't think people really believed it. But as I explained, the top of the market to the bottom of the market is typically one exact full year. And so if you look at the last 1 year on the chart, right, in 2024, the top of the market in 2024 was November, but the start of that pump was September 6th. The day after the supposed S&P 500 announcement was September 5. So that's exactly 1 year. And so if that was the bottom 1 year ago, that means this year it's the top. And so if September 6th or 5th is the top, and we go inverse what we did last year at this time, well, look at this move to the upside, and imagine that's a move to the downside. Hold your phone upside down for a second. So, and that's the end of November. And so end of November, early December, we may have a buy opportunity in the market. Remember, the macro environment that we're looking at is the Federal Reserve. Are they going to cut rates? Are they going to let the markets generally fall and create a panic in the market, panic in the financial ecosystem, panic in the administration, and also panic at the Federal Reserve? And that panic, right, if it starts in September, goes through October, and they say, inflation looks good, the jobs numbers look good, we're not going to cut. The market keeps falling. Jobs look good. The market looks good. Everything's good. Market keeps falling. And then boom, major fall. They're not going to let the year close out with the markets down. And so this could indicate in November or December, we're going to see a turnaround where the Federal Reserve does cut rates or does other quantitative easing measures. And that could be the most bullish event of the year. But people think where we are right now is the most bullish, because companies are buying Bitcoin, and Bitcoin's at all-time record highs. And last cycle, blah, blah, blah. Well, we're not in last cycle, we're in this cycle. And so maybe November in the last cycle was the top. Maybe this cycle it's going to be the bottom. Either way, the further we go, the closer we are to the bear market. The further we go, the closer we are to being bullish. But at the top of the market, you want to be bearish, and the bottom of the market, you want to be bullish. Opposite what the market is. And with that, let me know what you guys think down below in the comments of this video. Some people have been saying, Cryptoviser, you're just a bear. You know, we don't want to hear bear. It's like, guys, I'm just giving you guys my analysis of the market almost every single day on this channel completely for free. All I ask is that you give the video a free thumbs up and hit the subscribe button. If you want to help support the channel, you can leave a super thanks down below in the comments, or you can click the join or subscribe plus button down below here on YouTube to learn how you can become a channel member for as little as $1.99 a month. I'll see you guys on the next video. Invest responsibly, do your own research, and crypto on.